Hello all, thank you for attending the the hotel consulting and real estate in a turbulent macro environment panel today. This event is organized by the Hilton Alumni Association in support of our alumni during COVID-19. If you want to engage more with your fellow alumni, I would like to ask you to join as a committee member of our alumni board. Please contact me directly for committee positions. We have an excellent panel of experts with a diverse background today. I personally know each of them. They're not only outstanding professionals, but also individuals with exceptional characters. I am very excited to have all of you here today, and thank you for taking valuable time out of your busy day to join us. Now I'd like to end if my daughter Zoom bomb the video conference, please forgive me. Now I would like to introduce our panelists. Ms. Jenny Na. Ms. Na serves as the Regional Director of Finance for Benchmark, a global hospitality company. As the Regional Director of Finance, her role includes overseeing the accounting and financial operations of West Regional Benchmark's properties. She's also responsible for leading various hotel transitions, including new build, ownership, and management company conversions. Prior to joining Benchmark, she was Director of Finance for Park Central Hotel San Francisco, overseeing 100 million annual hotel revenue operations. She also held the Director of Finance position for several Starwood Hotel and Resort luxury properties, including St. Regis, W Hotels in California, and Ritz-Carlton, Chicago. Jenny earned her MBA from Bauer College of Business and Master of Hospitality Management from the Conrad Hilton College at the University of Houston. She was also the recipient of the prestigious Dean's Award. Next, we have Mr. Hector Medina. Mr. Medina is a Senior Director at Ancura. He specializes in hospitality and leisure-related projects. With more than 13 years of combined hospitality and real estate experience across the US, Latin America, and Caribbean, he brings significant advisory experience in the areas of hotel marketing and feasibility studies, hotel operation diagnostics, market and operation due diligence, as well as interim asset management. He has served numerous clients such as government entities, multinational financial institutions, law firms, domestic and international developers, lodging operators, and private investors. Prior to joining Ancura, he was a senior manager of new market development at Apple Leisure Group, which is North America's largest vertically integrated, all-inclusive brand management company and tour operator provider. With a resort portfolio throughout Mexico, Central America, Caribbean, and Spain. Prior to joining Apple Leisure Group, he was a manager at Alvarez Marsal, a management consulting firm. Mr. Medina received his Master of Science degree at the Conrad Hilton College at the University of Houston. Next, we have Pawan Kapoor. Mr. Kapoor is the Director of Asset Management at Westmont Hospitality Group. He has been with the company for over 12 years and has served in a wide variety of roles ranging from hotel acquisitions, dispositions, and asset management. He is currently focused on strategic diversification for the companies by developing a multi-asset type, multi-class real estate platform. In recent past, he has evaluated a broad range of domestic and international investment opportunities in multiple industry sectors, including automotive, banking, oil and gas, information technology, real estate, and infrastructure. Mr. Kapoor received an MBA in finance from the Bauer College and a Master of Science degree from the Conrad Hilton College at the University of Houston, where he was also the recipient of the prestigious Dean's Award. Next, we have Mr. Patrick McCaslin. Mr. McCaslin is a founder and COO of McCaslin Hotel Consulting, where he provides market and financial services for all types of hotel real estate projects. His wide range of experience include market and financial feasibility analysis for hotels, economic impact and gap analysis for public-private projects, and specialized experience in hotel and conference center projects, oil and gas related hotel projects, independent boutique hotels, and luxury hotels. Prior to co-founding McCaslin Hotel Consulting, Patrick was the director of CBRE Hotels Consulting and associate with PKF Consulting USA, which was later acquired by CBRE in 2014. Mr. McCaslin received his Bachelor of Science degree with emphasis in hotel consulting development from the Conrad Hilton College at the University of Houston. And my name is Xiaodan Ma Clark. I'm your moderator for this afternoon. I'm the Vice President of Hilton Alumni Association and a first-year PhD student at the Conrad Hilton College at the University of Houston. Now we begin with the discussion in a broad sense on how COVID has impacted your business sector. And then we'll move on to more detailed issue like sector-specific coping strategies, leverage, lending environment, and the kind of deals in the pipeline. So Hector, you've transitioned from Apple Leisure, predominantly a hotel management company, to Ancora, a management consulting firm. You also had a fruitful career with Everest Marcel. During your tenure at A&M, your experience with 2008 economic downturn, what differences are there between the 2008 downturn and our current economic crisis?
Yeah, thank you, Xiao. I appreciate the invitation, and it's always great to be at one of these university events. It's been a while since I've been at one, so it's exciting. So I think to answer your question, it's worth taking a few seconds to go a little bit back in time. I think that past downturns have impacted the lodging sector differently, but they've also had some similarities. So if we go back to September 11th, which that began with terrorist events, unfortunately, and there was a fear and uncertainty that was created because of those events. There was a fear and concern of air travel due to the uncertainty of future terrorism attacks and their potential impact on just general security and the economy. As a result, I think U.S. travelers avoided boarding airplanes, which in the end negatively impacted the economy and then consequentially also impacted the lodging sector. I think with STR, if you take a look at that data, which is circulating around right now with everything that's happening, there was basically 12 months of continuous, I think, ADR declines until ADR hit rock bottom, and then it took a little bit over a year for ADR to get back to, pre-September 2011 rates. So I think the common ground here is fear in 2011. If you look at the 2008, 2009 financial crisis or recession, this began a little bit different. It began with a disruption to the U.S. real estate and financial markets, and then I think it spread to the rest of the world in a delayed manner. It was sort of a trickle effect. And the cause of this was basically was based on fundamental financial issues, or what they call the subprime loan market, which in simple terms is basically really cheap loans, cheap risky loans that were executed, and then they were packaged again in a bundle and sold again to make more profit. And this ended up impacting the banking sector, as when everything went south, they did not have the sufficient liquidity to be able to sustain this shock. So obviously this led to financial wealth and job insecurity, again, causing a decline in travel due to the economic and financial uncertainty versus the fear in September 2011. Now, you fast forward to what is happening now, and with COVID-19, and this is a bit more complex, I think that it's exerting a more radical, if you want to put it, or abrupt effect on the just economy that was performing well, at least here in the US. If you really think about it, it's a combination of the past two events. This current situation, has created a lot of financial uncertainty for a lot of people, coupled with the fear of contracting a virus that has led to social distancing requirements, global city city mandated lockdowns, which in turn have impacted the all sectors of the economy, I would say, especially the travel and tourism industry. There's literally been a halt in air travel, with corporate travel and meeting conferences canceled, all being replaced with what we're doing right now, video calls. And then obviously occupancy and ADR dropped to their lowest points ever. However, one of the differences is, this time around, banks are in a better financial position than they were back in 2008. And that's due to a little bit tougher regulation that was imposed on them after the 2008, 2009 financial crisis. So, now they have they're in a better financial situation to be able to sustain the current environment, unlike, previously, in addition to having sort of all of those lessons learned from back in 2008, 2009. So this is why this time around, there's been a lot of, or a large percentage of banks, I think, have been able to work with their borrowers and not have to foreclose as they did back in 2008, 2009. So,
Okay. Yes.
no, that'd be it. That was it.
Okay. That's a really good overview. Thanks, Hector. And Jenny, just from a management company perspective, Benchmark has managed assets in the US, Europe, and Asia for over 4 decades. In which sectors have Benchmark been impacted the most by COVID, i.e. upscale, upper upscale, luxury, etc.?
Thanks for the questions, Chao, and also the great introduction. So also it's a great honor to be really the part of this forum and with my fellow alumni. So to answer this question, really to make it simple, my answer is luxury segment. Really, the more luxury your property position is, we see a larger and deeper impact to the bottom line, negatively in this case, obviously, right? It is because simply it is much more expensive to run high-end luxury operation where the fixed cost is simply higher than any other sector. And when really the break-even, the volume is not maintained, then the luxury segment tend to lose more. But I also wanted to bring and share a couple of other aspects of criteria that we have been seeing and operating through a few months since March. I believe that was really the first month that we start to seeing a significant volume drop in terms of demand. And they are location and business mix. What I mean by really the location is for our properties that are located in major gateway cities or really more of the downtown, we have been experiencing much more deeper and severe impact to their bottom line compared to the resort properties that are usually located in a less crowded or tucked in the middle of the downtown, the mountain or beach resort areas. So we believe that is really the reflection of recommended social behavior among us, which includes really the congregate is kind of not encouraged socially, or social distancing is required, maintaining, right, the 6 feet away from one another. It's all mandated. So people in general just feel less comfortable to travel to the dense areas such as downtown. And that's what we see on our financials, and especially more for those properties that located in major cities and downtown.
Thanks, Jenny. And yes.
Yeah, go ahead.
No, go ahead.
Yeah, and then I just wanted to touch base on the business mix as well. As I briefly mentioned, really the more your group, your mix is group based, the much larger variance were noticed compared to your either forecast or budget. So probably all of you may well aware right now our corporate environment has completely shifted since pandemic, right? Still many companies are discouraging gatherings and meetings, and some even exercising travel ban. So that is really reflected, really directly translating to the decline in our demand. So let's say, a good piece of group business that potentially bring to the table, not only a rooms portion, but also food and beverage or conference services, it's pretty significant. So definitely the lack of those group demand, it results definitely and negatively to those that heavily rely on that group piece.
Thanks, Jenny. And so we heard from a management company perspective, and I wanted to ask you, Pawan, from a principal standpoint, how has the pandemic impacted your line of business?
So first of all, let me thank you for inviting me to be part of this panel. This is truly great to be part of this panel, and also revisiting with my friends here, whom I'm seeing after a really long time. So thank you. Look, there is no equivalence for this pandemic in all of our collective modern history. It's within 2 weeks of this pandemic hitting our shores, the occupancies fell 90% in most hotels. And let me have this number sink in a little bit. 90% in 2 weeks. That can have devastating effects on overall operational performance of a hotel, especially if they're expecting it to be a peak season. So having said that, the way it impacts different organizations and different units, even at the property level, is going to be different. There's certainly a lot of pain felt across individual property levels, as Jenny testified. Those expecting more group business are suffering and will continue to suffer till the time there's some comfort in traveling. As Hector alluded to, the travel part of the equation where there's no air travel, so people are not traveling. Business travel has significantly reduced, so those will keep causing pain point. Where some organizations come in from buying and selling of hotels, from that perspective, there will be a lot more deals available in the market internationally, not only United States. So there will be organizations that will be suitably positioned to take, for lack of a better word, advantage of this pandemic. And there will be, smaller organizations, potentially even, mom and pop establishments where, they're independent hotels, 1 unit or 2 unit, and they won't be able to bear the cost, and they will have to either return the keys to the lender or, put the hotel on the block. So there will be, there's going to be significant supply that will be in the market for, for those who want to take advantage of it. Of course, it's not really in a positive light of things, in the sense that, the pandemic is really hurting people. But, if I have to sum it in a single sentence, I would say that, the supply will be overbearing in the hotel transactional scene.
Okay, and that's what I've seen as well. There's no lack of deals on the market right now. And Patrick, your company does hotel feasibility studies, and your company has a stellar reputation for performing those studies that are respected by lenders and developers. So with the current trend in new development, how has your business been impacted, and how has your organization's strategy been adjusted?
Yeah, well, thanks for that. We pride ourselves on our reputation, and I think a lot of that comes from many years of working with good people like the folks on this panel that we all know quite well. And I think building a lot of those relationships has enabled us to connect the right people in times like this. When you've got hotels struggling, as everyone's mentioned, being able to kind of a new pivot, if you will, that we didn't really plan for, and was sort of a sad pivot, is that a lot of hotels have become distressed, and we've seen a need for services to help with distressed hotels, whether it be, equity infusion to keep them going, whether it be, sell of mortgage, whether it be sell of the hotel. And so we've been able to, because of the capability of our network and a lot of the folks that we work with, been able to pivot into providing some of that assistance and connecting the dots and getting some of these deals together so that the hotel industry can continue to move forward. But I think as several of the folks here have alluded to, a lot of the new supply is changing, where normally we would be doing a lot of feasibility for new projects. We've seen a lot of stuff come online as new build. I think the supply is still going to come, but it's going to shift into what Pawan said, which is we're going to see a lot of the hotels changing hands in the coming months and year.
That actually is a good segue for the next sets of questions. So I want to ask the panelists how your sector and company has pivoted during the pandemic. So Jenny, what innovative measures is Benchmark taking to get its hotel back to running, generating revenue?
Or generating revenue. So, well, I don't think we can really expect a good result or even a good execution without a well thought out plan. And as far as finance discipline is concerned, it's all about forecast. I don't know, maybe some of you may think, what is really the point of, right, a forecast when there's a lot of uncertainties or variables that we have very little control over these days. But really back in March, when we start to see a significant impact on our financials, and that was the area that we deployed all of our financial leadership resource. Number one, to really understand what's going on, and number two is what we can do about it, right? So that was really all about forecast, and in this case, it refers to the process of preparing different scenarios that we can anticipate as much as possible and set the game plan ready. So when things really kind of changes, then we know what to do and act upon in a timely manner. And I thought that was a really critical part, and we will continue to do so in that area. I can mention a couple of others, like sales and marketing wise. So what's happening, or what they've been concentrating on, is really the area we believe that they can make an impact. As I briefly shared, we see the resistance in a group or corporate business. So instead, we were really focusing on looking at the transient market, because in a good signal, we start to seeing some of the transient demands bouncing back. So, they've been nothing but really thinking outside box and creating some of, somewhat unconventional packages and really tapping into those market. And that has been really successful. So, the recent study or our forecast, some of our properties in third and fourth projection really shows that the positive variance from transient market is large enough to offset an entire deficit from first and second. Yeah, it is really amazing. And I truly believe that is a positive signal, and it's a result of really our team has put together and executing and throughout. And I don't know whether you've heard or even tried the workcation, and that was one of the campaign that our team put together. I mean, staycation, we pretty well known, but one of the campaign that we put together was workation, and that was a huge success. And personally, I mean, I got to try in one of our beautiful resort places, and nowadays, I mean, everybody's working from home, majority of us. So, if you can really literally can work anywhere, why not trying one of the beautiful place? And that campaign was a really success. So really, we're trying to think, outside box and everything that we can possible and materialize whenever there's an opportunity, and that's what we do.
That's amazing.
Yeah.
The positive variance can offset the losses already.
Yeah, it is, surprisingly, really, that was a surprise. And we've noticed a few, and mainly from resort properties, but really more than, I have to say, a handful. So it's not at all bad.
Right, the silver lining. We start seeing some positive trends.
Exactly.
So from your perspective, Pawan, part of Westmont's business investing in full range of hotel assets, ranging from limited service to luxury hotels around the globe. In general terms, what's Westmont's current strategy in equity deployment?
Well, look, this is something that I alluded to earlier, that there will be a strong supply of hotels in the market. And Patrick also mentioned that, a lot of hotels are expected to be, changing hands. And Westmont happens to be one of those organizations which is constantly looking for good deals. So on a good day, we're looking at dozens of hotel properties for potential acquisition. And what this pandemic has done, it has resulted in a severe shortage of guests for hotels to continue to operate at their existing profit margins. So there will be those with somewhat of a deeper pocket to be able to sustain this till the time the guest supply comes back, and those that won't. So Westmont is actually going to be looking for these good deals that make sense in good markets. This pandemic has affected us big time, sure, but it is not a constant. Part of the reason why there was a knee-jerk reaction in, I would say, February and March, was there was minimal understanding about how this particular virus affects and spreads. Now, we haven't received a full knowledge about it, nor we have a way to cure it. But at the very least, we have some commonsensical measures that can be used to counter it, right? Every single brand that we know of, every single brand of repute has come up with some sort of a program to portray that a sense of safety and cleanliness to the guests that they come and stay at the hotel. So we fully expect the markets to recover. Now, the debate can be whether that happens over a period of 1 year or 2 years or 2.5, 3 years. And that will also vary a little bit with the market. And like Jenny said, group mix is an important component of how that happens, the guest mix. So I believe there will be plenty of good opportunities for those that can take advantage of those opportunities, and we would like to see some of that.
Okay. And I actually have a hard question for Patrick and Hector, and the same question. As consultants, are your clients or potential clients relying on your services more during this environment, or the reverse? And what are you recommending your clients to do right now? Patrick, you want to go first?
Sure.
Actually, I was going to say, Patrick, go ahead.
Yeah. Right. All right. I'll take this one. It's I hate to say it depends, but as a consultant, I feel obligated to say it depends.
Sure, you're being a good consultant,
right? Yeah, I can find the answer for you. Just give me a second. No, but honestly, it has been a mixture of things. We've seen, obviously with feasibility, there's a little bit less new feasibility right now. However, we're also seeing some of the studies we did in the last year where they're needing the study to be updated. The financiers wanting to see updated numbers with everything that's happened. They're not totally, abandoning the project per se, because they know, even if you start today on a project, between permitting and planning and architectural drawings and everything else, it could be a year before you break ground, a couple of years before you open. So you're talking a 3 to 4 year timeline. So some of these guys are far enough into the process that they want to keep going. They want to keep it moving, knowing that they're not going to open in the immediate future. And so we are seeing the lender, though, saying, okay, but we're going to need to see some updated numbers with, everything that's gone on. Like you said, you see a 90% drop in 2 weeks in hotel performance, and the finance will really want you to take a hard look at, is this going to work, and how is this market going to recover? Is it going to recover quickly? Or in some cases, like in the Houston market, we're seeing kind of a double-edged sword here where we've got both, COVID and the oil and gas being down as a result of COVID. And I think, we're going to have to see travel get going in the rest of the nation before we start seeing, travel get going. And then that in turn will get oil and gas going, which will then in turn get the Houston hotel industry going. So it's, I feel like it's a little bit more of a U growth, if you will, for something like Houston, whereas other markets may drop real fast, but may also come back more quickly. Some of the resort markets, as Jenny mentioned, where people are seeing the opportunity to go and work from elsewhere, or just to get out of town but not go too far. So we are seeing a lot more pickup in those properties much more quickly, sometimes even offsetting the loss. Galveston here in Houston would be a good example of that. They, as soon as things were able to, they were doing much better than most of the rest of Houston. Everyone wanted to get out of town as close as possible. And I guess for the other thing is we're seeing more on existing hotels leaning on wanting to see forecasts for how the market's going to perform. And we're one of those crazy people like Jenny that forecasts the market when everything's down, and whenever good years, bad years, you name it, we take a crack at it. And so we recently, actually, to give myself a little plug here, we recently presented our forecast to the Houston Hotel Association. We do a forecast every year for Houston specifically, looking at how each submarket's going to perform. And we get into the details to help the hotels here with planning, budgeting, forecasting. This year gets a little trickier with as far as things have fallen. We don't expect this year to be a great one. We don't really expect next year to be too shiny either. So it's not great news, but it's some interesting information. And I did today put the presentation on our website. So if anyone is interested in looking at that, it's mcaslinhotelconsulting.com. It's on the bottom. You can download it. Take a look at our forecast.
Thanks, Patrick. I'll definitely take a look at that. Hector?
Yeah, so I think it's worth mentioning that so the consulting group that I'm with, where the hospitality group is part of the real estate group, which that group is part of the restructuring group of the company, or the turnaround and restructuring group. So I think we have a little bit of a buffer where, we'll do good on, good economic environment. And then in times like this, I mean, we tend to do pretty well as well because of just the nature of our base business, which is restructuring. So at the end of the day, a lot of our clients end up being lenders, financial institutions, and legal firms. And as I alluded to before, most of these financial institutions or banks right now are in a better financial situation, let's put it that way, or have better, have much more capital in reserves than what they had before. And also borrowers and lenders have been, very proactive and trying to work things out amongst themselves before they can get pretty ugly. So, on the restructuring side, we still haven't seen that wave of work that we thought we would have seen by now come our way. However, this was based on the premise that by this time around, the situation would have improved, the number of cases would have come down, and just in general, the economy would have been back to normal. But this is not the case that we're seeing, not the situation at all. And it's here and everywhere else, abroad. In countries like Europe, France, Germany, and Italy have started to do shutdowns again, mandatory temporary shutdowns to try to control the virus. And some would say that we're on a second wave. However, some would still say that we're on that first wave that we never were able to kind of get off of. But I believe that as advisors or consultants, we will be on high demand, especially given the unprecedented situation and the depth of the impact that it has caused. This is, like as Pawan said, this is unlike any other situation, and many owners and lenders are still trying to figure out the factors that drive their decisions, such as, if I'm a hotel owner, do I keep funding the operating losses? Do I just shut down temporarily, or does this mean that I should just shut down completely because it just doesn't make sense? I think that would be the case in probably a hotel that was struggling before COVID. I don't know what will happen, after COVID. Some just, is it worth just handing back the keys to the bank and saying, here you go, congratulations, you're the owner of Chateau Medina, or just for closing. So I think that at the end of the day, a lot of work goes into making these important decisions for, whether you're an individual investor, a financial institution, whoever. But a lot of work goes into making such an important decision. So I think that as hospitality advisors and consultants, we're in a unique position right now to be able to actually help, provide our views and perspective, and I think maybe more importantly, be an additional resource and source of knowledge for these individuals or companies to help them make informed decisions. So I think again, it's going to take a little bit of time to see how busy we get, but I think that that's where we're at right now in terms of what's happening right now in the current environment.
Thanks, Hector. You actually alluded to my next set of questions. I want to ask you guys of some specific current strategies during this environment. I'm going to ask Pawan. So what geographic markets have you seen the most activities?
So, it's the markets are not necessarily geographic in nature. They're more oriented towards what's the purpose of the visit. So there is certainly a more increase in local drive-in demand. Even now, and I'm sure Jenny would agree with what I'm saying, that there's more weekend demand than there is weekday demand. So geography does have a role to play to the extent that, if somebody can afford to go to a resort for a month and work from there, like Jenny is trying to promote for her hotel. So in those cases, the geographies will matter. But for the near future, more than the geography, it's about the type of mix and the type of travel. And what we have discussed separately in different forums is that the driving kind of a customer, the weekend traveler, the person looking for leisure, the people, the families who consider vacations, they treat them on par with fundamental rights. So those kind of pent-up demands, whichever properties are able to meet those kind of demands, those will be successful to some extent, given everything.
Okay. And Patrick, I'm curious, what kind of projects, well, you alluded to this a little bit, what kind of projects are you seeing in your pipeline?
Yeah, so kind of as I started to say before, but we are seeing a little bit of a shift in kind of the what people are looking at. Hector mentioned this as well, which is we're seeing a lot more detailed questions, a lot more specific questions, a lot of questions looking at business mix, a lot of questions looking at, much more specific what sectors of the market are going to come back and win, as opposed to the more general, market data that people look at. We are doing updates to feasibility studies, some that have been a long time in the works. I know they've announced, I think last year, the Baker Hotel in Mineral Wells, an old historic property, been closed for 50 years, wonderful job of renovating and reopening. And, we've had run some numbers for them in the past, and they're very close, and they're even under construction now, getting things moving. Bank needed a quick update just to kind of look at what is the real performance? What is the shift? What is the market going to look like going forward? And so for them, we came in and did another update, got the numbers together. It's still a viable project, looking really exciting. So things like that are fun to see, that, down the road, they're still going to be able to be viable. We're also seeing some existing hotels come to us with questions on repositioning or rebranding, saying, "Hey, our agreement with Hilton or Hyatt or Marriott or whomever is coming up, and given the downturn, are we best positioned to continue with this brand? Should we change brands on one or more of our hotels? Should we position our price tier differently? Are we competing as effectively as we could be?" So we're seeing a lot of internal analysis, as well as when you start getting into the transaction side of things, people looking at, should we sell, one of our hotels to help fund the operation of the other 8? Take the more profitable property and still be able to get a premium for it. Because like you said, there is a little bit of a disconnect between the perceived value of the property from past performance and the kind of current market price point based on current and projected future performance. So, looking at creative solutions, rather than just saying, "Oh, let me just sell all my hotels at a huge discount." There's some pride. We all, someone opened this, ran it, put their heart and soul into it, and you don't want to just let it go because of an unforeseen circumstance like this. So I think we're having to get more creative with our solutions and kind of what our pipeline looks like and how we can help during this kind of unforeseen, I hate to overuse that word, but this unforeseen time, and really help get people through it.
Thanks, Patrick. And Hector, what kind of project you're seeing that are unique to this environment that you would have not seen in other non-pandemic situation?
Okay, so at this point in time, I would say that we would have thought that we would have been inundated with restructuring type work, but that just hasn't been the situation, given just the bank's willingness or the lender's willingness to just work with their borrowers. However, if the situation doesn't get better, I don't think that banks are going to be as willing moving forward to be able to continue to work with lenders, and we should start seeing more restructuring work. But to answer your question, we have a few big projects right now. 2 of them are on the restructuring side, which makes sense with what you said. But believe it or not, we do have a mergers and acquisition project, which it's given the situation, it's not something that you would expect right now. This project actually started towards the beginning of this year in January, where we did a little bit of pre-due diligence for a US-based client that is trying to acquire a Mexican-based portfolio of hotels. So it's actually a cross-border deal. And then Corona came, and so it put that deal on hold because obviously our client here is a big hotel operator, third-party hotel operator. So they had, a big situation they had to deal with. And obviously the portfolio of hotels, or the company that owns the portfolio of hotels in Mexico, was dealing with the same situation. But believe it or not, 2 weeks ago, the process got started again. And so we're actually helping out with a full-blown due diligence process that was reignited. So I think that if this deal goes through, you'll definitely be hearing about it in the news because it's going to be a big deal. And then the other 2 projects, I don't want to bore you with it, but it's just 2 restructuring projects. One is a portfolio of hotels. Actually, I'm working on that one. We're representing a financial institution. They have a $350 million loan on an 18 hotel portfolio that wasn't performing pre-COVID. And obviously COVID, that portfolio is a disaster with 17 of the properties currently closed. So we're trying to help them. We're trying to help the bank get their arms around what they have and what it's worth, and what they need to do, how they need to reopen these properties, when and if they should reopen. And then the other one is a it's a lender that has an outstanding loan on a New York property, sort of the same situation. However, this lender doesn't really know what they want to do, which is kind of worrisome, because you would think that they would have their ducks in a row and would, be following a set of procedures, but they're really all over the place. So that's been a bit challenging. But anyways, we're helping them out, sort of understand some of the things that Patrick actually alluded to. They're thinking about, well, what if we drop the current flag that we have and rebrand? What's that going to cost me, and how long will I be shut down, and how long will it take me to reflag, and what's the cost on that? And so it's helping them with all these different scenarios that they need to understand to be able to make that informed or educated decisions. So those are the three big projects we have. And again, I think that as time goes on, and if the situation doesn't improve, we'll be seeing a lot of more restructuring type projects hit or knock on our doors. So we'll definitely be busy.
Okay. Well, when your big deal closes, I want you to take all of us out for a nice dinner at Morton's.
Well, I'm not an investment banker, so I don't get a cut of that deal. Okay? So I wish, but no.
There you go, Hector. This is recorded, right?
I know, it's a verbal contract. So Jenny, your clients, which are the owners of the assets, are they positioning themselves? Are they positioned to acquire more assets during this environment?
Yeah, I think I can definitely echo what those gentlemen stated. Really one thing that I can add here is definitely we see increasing number of transactions and really in acquisition deals, and therefore there's more opportunities for us also in terms of management agreements, right? So it was just amazing that speaking with our business development team a few weeks ago, or even last week, they say they're having one of the busiest really year ever. And it is surprising. And I think it pretty much is going back to what Patrick said and Hector said. They are busy seeking those great deals. We see the number of management company conversion this year went up compared to last year or even a few years back. And some of them are really driven by just usual ownership change organically, but pandemic definitely played a role here. And we saw more assets in the market. Maybe some of them are not planned, but rather forced by external factors. And we also see early termination of existing agreements. So maybe as just like what Patrick said, maybe they're looking for a different branding strategy or restructuring or even close down. So we saw a lot of those, kind of traffic and volume in the market, and all of those translate into that there are more opportunities, not only to those equity partners or equity, the investors, but also management company just like us. So that is why we are really having one of the busy year, trying to capitalize some of those and seek for some of those great deals. And Benchmark, we are the hospitality operator, but also we also source, those asset acquisition deals through our capital partner, Gemcom, and sometimes in the form of key money investment.
Okay, so we're running out of time. So quick fire. So just maybe one simple sentence. I know the national banks right now are not lending, but the regional banks are very active in the marketplace. So what's your perspective on the deal size leverage? How has it changed, if anything has changed since the pandemic, comparing to before pandemic? And what's the lending market look like right now? Anybody can answer this.
Well, I'll take a stab at it. Obviously, the lender community is going to be careful about lending their money. The traditional capital sources that you would have experienced in pre-pandemic scenarios, those are not likely to be as active, and sometimes even smaller players, like you mentioned, are going to be more actively seeking certain opportunities. But one thing that I have learned from my colleagues is that even the debt funds and those kind of institutions who are lending, their interest expectation is through the roof. And that directly affects the underwriting standards of a particular deal and the kind of discounts you would see going in to make sure that your unlevered returns are even higher, while it may not have that much of an effect on levered returns.
Thanks, Pawan. Anyone else? Before I turn, yep.
Sorry, just to add, a few more sentences to that. I think I agree with Pawan. I think that, right now, a lot of the big banks have just put a halt on any lending, especially if it's new development. That's pretty much, that's non-existent right now. But I think that that's another reason why you also haven't seen a lot of transactions take place, because of that. And then the other thing is, it's because of also where expectations are on that bid-ask spread. I think as an owner, you believe that you have a nice property and it's worth X, and maybe your discount is only 15% if you were to sell right now. But as a potential buyer, I'm thinking, well, the situation is not looking great. That discount looks more to me like a 35% discount. So that's where you're not seeing some of the transactions that you thought you could be able to see. But anyways, just going back to the lending, again, I think that it's going to be a while before you start seeing banks be active. There's just not a lot of visibility right now. And, I think that that's what's going to keep them on the sidelines for the time being. Who knows? After the election, maybe some things clear up. I don't know. Or maybe 2021's, once 2021 comes around, we start seeing that light at the end of the tunnel, but it's still difficult to say.
We're very much seeing that exact same thing. And the few things that we are seeing successful are, like I said, owners being realistic and saying, well, what's the one property I can sell for the least amount of discount to keep my others going, rather than, having the mismatch in expectation. And then two, I think where the transactions are actually happening are with groups that have the capital to get it done outside of traditional lending. The few deals we've been involved with that we've seen move forward have all been pretty well self-financed.
Thanks. We have a few minutes left. Let's turn to our Zoom participants. And I'm going to ask some of you to unmute yourself. Kahal, I think you are unmuted. Would you ask your question, please?
There for a minute.
Uh-oh, I won't do that again. Well, when I promote them to a panelist to ask the question themselves, they have to log off and log on again.
Can you guys hear me okay?
Yeah.
Yes, hi, welcome back.
Thank you. Yeah, just kicked me off real quick. Sorry if I got a little bit of background noise in the neighborhood here. Hi, Cale Mowry. I'm in Denver, Colorado, graduated in 2010. Go Cougs. Thanks so much for all the info today. Yeah, I had a couple questions. The last trend of hotel development in this last cycle was a lot of properties that had very low rooms to space ratio, right? Really catering to the transient travelers, especially the business transient travelers. So as we look at that next cycle of hotel development, do we see that trend of low space to meeting space to rooms ratio increase, decrease? What do you guys think on that?
So I'll take a stab at that. I think it's probably a little bit too early to tell right now. I would say that, depending on how everything with COVID sort of starts playing out, I think you'll be able to start to sort of make those decisions. I just think it's a little bit too soon. So you're going to have to sort of wait and see what happens. I mean, it's just with meeting space, there's no
Yeah,
visibility right now as to what's going to happen. It's just, I don't know. I mean, whether I believe that it's going to come back. I believe it's just going to take a little bit more time, but I believe it's going to be morphed in some way, shape, or form. What that morphing is, I don't know, but I don't believe that it will completely disappear and that video calls are going to replace that. You need that human interaction. So definitely, so to give you an answer, I would say you definitely need meeting space, but I don't know if you'll need the big box meeting space that, was sort of the norm before. So that's my opinion.
yeah, we're.
I can, sorry,
Oh,
go ahead.
Go ahead, Jenny.
Yeah, so I can add a little bit more on that too. You know what? So we had a very kind of active discussion about that too. You know what was very surprising to find out was, right, as I shared a little bit of our corporate working environment, people continue to work remotely, and we look, probably that trend will continue for a while. And because of that, environment will continue. And recent survey shows that people feel there's more need for gathering, more conventions and trainings and meetings, and then more frequently. And that is a really good sign. That means then there will be that demand will come back at some point, probably not first quarter or second quarter of next year, but definitely towards the end, third or fourth quarter of 2021 or even 2022. And then surprisingly, we see, I mean, this year, third and fourth quarter, a lot of our properties has experiencing the increasing number of social events like weddings and birthdays. And I think some of them may be kind of postponed event from first and second quarter, but people will try to really find out a way to celebrate, carry on their life. So it doesn't really mean that, right, they will completely stop having weddings or birthdays or celebration. Maybe the setup will be different. Maybe, the typical banquet setup or food and beverage setup, probably we will see some changes. And with that, maybe we may even need more space for that. So definitely, I do believe that business will come back. We don't know when exactly, but I think it's a little kind of only to say that all that piece will go away soon.
It's funny.
Sense. Sorry, go ahead, Hector.
No, go ahead.
The question also hinges on the recovery and the type of recovery. And recovery, in my view, hinges on the occupancy revival, right? Having said that, gatherings are still taking place to this day, maybe not to the same level as pre-pandemic levels, but they are more distanced. So a conference room that could accommodate 100 is maybe they're having 20 people sit there, or with 6 feet apart or something like that. So if you have to keep maintaining that, so that logic will tell you that regardless of what you plan, you have to plan for expanded space. And the additional consideration which you could consider for hotel planners to include in the thinking is what kind of market they're putting that in. Is that a market which is already oversupplied with meeting space, or is there a real need driving it? And that would depend from city to city. Are you putting up a new hotel in San Antonio, Houston, or one of the places where there are big boxes already there with meeting spaces, or are you trying to completely capture an unmet demand? So like Patrick said, it depends.
I was going to say, since Kale asked the question, we should all bill him our hourly rate. Kale's a classmate of mine that I know quite well. But no, and we're seeing exactly what you guys are saying, which is, it's kind of a mixed bag, because we are seeing groups and conventions delay, or we're seeing them continue, but with reduced capacity. They're only booking 40% of the room nights because they can only fit so many into the large meeting space. And I think it's interesting to see, because we're also seeing the big social events and things kind of push back and push back and push back, because people are really wanting to do it the way they plan to do it, which is I think a good sign, in that people are still looking to hold their event the way they wanted to hold it, with the number of people, and they're willing to wait for it. But the question becomes, when do these requirements get lifted, if they get lifted? And can you build a ballroom 4 times the size to accommodate social distancing? Is that may not be economically feasible. So it's going to be interesting to see. But yeah, it's a good question.
Okay.
And then I have a second question, unless you want to go to another panelist, you tell me. I'll go ahead and ask my second question then. Maybe to the other three, not Patrick. I don't want to send Patrick any money.
Yeah.
So my second question also just on future development as it relates to this home share trend that just continues, right? And we see some interesting models that have come to fruition in the last several years. Sonder comes to mind, but just other companies that are buying floors of apartment buildings, in some cases entire apartment buildings, and then operating them almost as a quasi hotel, but it's truly a home sharing. So looking at that trend, how do you see that impact future hotel development?
Patrick?
Right. Well, no, it has been an interesting, we follow some of the, Airbnb and the other bookings quite a bit, but it has been interesting because prior to COVID, you saw a lot of people moving into the vacant, office space or vacant apartment space and taking it over and adding rooms to the market. But we've seen kind of a mixture of things. On the one hand, I think some people are more comfortable staying in those facilities because they feel like somehow it's safer than a hotel because it's, someone's house, which I guess that's debatable. Whether or not, the standards are you want to place with a brand or trusting whomever is running the facility. But with the companies, like you said, you kind of get that, it's right between the two, where they get that comfort level of someone's running this, someone's putting this, someone's maintaining this, but it's a little off the path and I'm not going to run into as many people as hotels. So from the consumer side, I think we're still seeing some interest in that. But I also think from the business side, it's becoming a little more challenging to make that viable, given that hotels are so empty right now. It's hard to compete successfully against them because previously you could undercut and fill your rooms, but now all the hotels are willing to cut rates a little bit to get folks in. So it's kind of yes and no. It's a little too soon to tell.
Yeah, it depends. I got your go-to.
It depends. Yeah, I can study that further for you.
And look, just to
bill him.
Right?
Yeah. Just send your proposal.
So look, things like this and even stuff like Airbnb, and there'll be a lot of different kind of innovative models that'll keep coming up. How do they catch up, and how sustainable they are in the short and the long term? That would also determine, the overall success. I know it's not a rocket science answer like Patrick's, but the good answer is it depends.
I think in some markets, it's going to continue to be more viable than others. I think that's going to be a location-driven thing. Some of the resorts, especially in Colorado, some of the, more condos and timeshare type facilities that are there that are not being underutilized right now in destinations that are popular, that people are traveling to, something like that becomes more viable.
Cool. Thanks so much. Appreciate it.
Chow, you're on mute.
Yeah.
Oh, I am. Thank you. Okay, so I will demote you right now. You're demoted. And we have a treat. We have Lily Ng as one of the attendees. She is actually a Eric's Club board member. She's also the CEO of Hoodie Group Limited, and she's based in Hong Kong. And I'm now going to promote her as a panelist. She just wants to say a couple words on markets in Asia. Oh, I have to kick her off. Please come back. Hi, Lily.
Hi, good morning, everybody. Or good evening.
Good morning to you.
Yes, hi. It's very interesting panel discussion, and that's why I woke up at 6 o'clock in the morning to listen to this. I just want to make a couple of comments and maybe put a little perspective. I'm based in Hong Kong here, and obviously, close to the Asia market. Hong Kong is one of the earlier markets or cities that was affected by COVID. We literally started the first, I think the first case was discovered early in late January or late or early February. So with the perspective of SARS, which took place about 10 years ago in Hong Kong, it was a very big deal. I think the entire country, the entire city, shut down, everybody, it was literally from no one wearing masks to everybody wearing masks in, within, 24 hours. So, and then, obviously we took, the city took very, very drastic measures. And in some way it contained it, for a while. And then we now, interestingly, now we're sitting in November, we're now experiencing the fourth wave. But then in comparison, the numbers are still low, but especially in the context of Hong Kong being a very urban, a lot of times you take public transportation, you are seeing people and touching, everything. And it's definitely a lot more urban environment. But when we're talking about the fourth wave, what it means is we're seeing a spike of about 9 cases a day or 10 cases a day. And the city is taking a kind of a very flexible approach. What it means is when the cases numbers go down, then the restrictions get relaxed. But then when the cases, when you see the wave coming in, and then they restrict it, such as, no more dining, no more groups of 4 dining together in the same table, definitely all the social distancings, large events and things like that. That's just to give a context as to, how the pandemic has affected here. But what I see in the hospitality space is that, number one, since I do own a website, we see how people are searching and what people are searching. The word staycation is very, very, very popular. So any articles that has the word staycation on it has lots of traffic. So what people are really looking for is, although they can't fly out or leave the border per se, people are looking at ways to still maintain some kind of social activities. So the internal market becomes a big deal. Of course, if your market has only a population of 50,000, then that is pretty sad, pretty difficult. But when we're talking about a market that has 7 million people, traveling is not impossible. It's just cumbersome because of the inbound and outbound quarantine. So people tend not to do it, and then all the procedures need to do. But we still have travelers coming into the market. But I actually also want to put another perspective is I do see that investment deals still happening, but people definitely taking a much longer term. So I think there's two elements in play. One is the actual market, how it's functioning, and then another aspect is how the the capital markets in terms of investment and the new development deals that are happening. My friends in the hotel development side, let them still many hot markets in here. Vietnam being one with a lot of new deals, hotel companies signing contracts. But definitely, a lot of slowdown in terms of more recent openings and closings. That's all my comments. Thank you.
No, thank you for that.
Thanks, Lily.
Appreciate it.
It is interesting too, just putting the number of cases in context when you look at, what they consider to be high in other parts of the world right now that they're shutting down for. And yet, here we may have many, many times that. In fact, my brother lives in Japan right now. We were talking about that recently where, the number of cases in Harris County is something like 4 times, just looking at active cases, 4 times the number in the entire country of Japan. So spikes are very relative. And so I think it's going to be interesting to see how do we control a spike when instead of it being 10 or 100 new cases a day, it's thousands. It's just interesting to see the differences.
Well, the key difference is, Patrick, that in Hong Kong and other places where things are in control, wearing a mask is not equated with
absolutely.
my basic freedom rights.
Something that's already done.
Yes.
Yeah. Oh yeah.
Okay, so that attitudinal
Oh, 100%.
shift is really, really important. I mean, when you're riding a bike, you need, by law, you're required to wear a helmet, right, for your own safety, and that's not considered any kind of encroachment on your freedom or rights. And when it comes to masks, suddenly it's a big political statement. So,
Oh yeah.
So anyways, US is the leader. We lead the world.
Unfortunately. Yes.
And I think that's what's
No.
going to be interesting to see with development and kind of what the future looks like is what is the impact of us having, such a large number of cases and being the leader, as you said, compared to the rest of the world. And what does that mean for the length of time it takes for us to get back when other nations may move on much sooner?
Well, it means 25% market share for sure.
Yeah.
Okay, well, on that note, that concludes our panel. On behalf of the Hilton Alumni Association Board, I want to thank all the panelists for joining us today. And thanks to all the Zoom participants as well. We appreciate each of you taking time to join us virtually. Please feel free to put your name and email address in the chat box if you want to get involved as a committee member of the Alumni Board, or contact me directly. My email is in the chat box as well. We still have a couple questions remaining, but unfortunately we can't get to them today. So please send me your question to my email address. I'll forward the questions accordingly. And thank you, be well, and good night.